So Tim has informed me that the stock markets are dying.
Well, they're very volatile, and everything is causing people to panic sell because the consumer sentiment, consumer confidence in the market is lower than it's been like in 2 or 3 years. The economic data coming out is like one day it's good, one day it's terrible. So like there's a lot of volatility. So the investors are spooked, and there's going to be lots of sideways trading or down trading. It's like if you're like one of those that likes to buy the dip, I would hold off on buying the dip until we get more data to make sure that we're not going into a recession. If you remember back in 2024, we said in our predictions for 2025, it said it's not going to be like all the experts are saying it's going to be another 20 to 25% gain, which it still could be. I said it's probably going to be more along the 10 to 15% gain, but I also said there could be a 10 to 15% loss based on the tariffs and the economic policies that are being presented by the overlord Orange Daddy. If we go into recession, then you have that's why like when we talked about our recommendations, we said to get into some defensive stocks like utilities and banks and things like that, just in case, because you'd rather cover your ass, and they're not going to go up as much as like the tech stocks, but if we have a year where it's up, they're still going to go up like 6 to 10% or whatever. Whereas the downside, if you're in tech, if you're too overly invested in technology, if we have a recession, it's going to plummet, and you're not going to have any of that security of not going down as much as you would if you had utilities and preferred shares and closed-ended funds and financial stocks. Like, it's just the reason we set our portfolio up the way we did is just in case 2025 wasn't the shitter, basically. In 2023, if you remember, the 2023 market was up 20, I want to say 22%, but like if you take out like the top 10 stocks, the market was up 2%. That could be happening in 2025. Again, it seems to be top heavy, and if the top stocks go down, the whole market's going to plummet. If the top stocks go up, the rest of the market could plummet, but the top stocks will carry it. So it's like you're looking at like a 20% gain, but it's only in like
a handful,
10% of the stocks. That's something to keep your eyes on and be aware of, that could happen again. Because like right now I'm reading the economic data for NVIDIA does their earnings after the market closes today, and like the whole market is holding their breath, hoping that NVIDIA has good returns. If NVIDIA doesn't, I foresee the whole market shitting the bed, because they're tying the entire stock market into NVIDIA's earnings, which is never a good thing.